Well, I think that's a very good question. We're seeing some determination from the new governor to confront inflation, but it's very difficult for him because we're in a slow growth mode and activity is still decelerating. We also, of course, we have the big gap between the consumer price index and wholesale price inflation in India, and I think there's some expectation that among investors that they would like to see a bit more weight given to the CPI, which is the normal measure of inflation that central banks try to influence in other economies. So I think there could be another rate hike in the cards in coming months. I think it's right that equities do poorly when there is a structural inflation problem and the central bank is having to hike rates and is behind the curve. Arguably, the RBI now is much less behind the curve. Some of the recent increase in inflation was due to fresh food prices and not really structural factors. But I think the reason that the market is moving up probably is because of the better global news that we've been having. Well, I think when tapering kicks in, it's possible we will see some disruption to global financial markets, but I don't think it will be on anything like the scale that we saw over May to July. After all, investors have had plenty of time now to reposition their portfolios, so there could be some short-term reaction, but it won't be anything like as bad as it was this summer, I don't think. I think that always makes sense, yes. We believe very much in maximum diversification across asset classes and across regions and geographies within a major asset class such as equities. So I think it would be a very difficult game if you were running a portfolio by switching very actively from DM to EM and back again. I would rather be exposed to both classes and look for opportunities within each universe.